see if this works now.
Here comes Donna.
All right, I am Kimberly Kozowski, and I am in mortgage lending, and I've been in mortgage lending since 1998. So, started with a small bank that used to be up here in the corner called Patriot Bank. Come on in and join us.
Just have a seat anywhere.
So, you will see, and please forgive me, that I am literally right in the middle of our company being acquired. So all my information says first choice, but technically as of about 48 hours ago, we became cross-country. So I will make sure that I give you my email at the end here, but my phone number, all my contact information remains the same. With me tonight, we have Donna Cable. You want to introduce yourself?
Hi, I'm Donna Cable. I work for Remax Professional up in Exton. I do have a home office too, which is right here in Phoenix, Gulf Springs City area. I've been in real estate for 20 years. Originally, first 5 years I was with Weicker, last 15 with Remax.
Awesome.
Easy enough.
So we are here for you guys tonight. So here's what we're going to do. I'm going to start and I'm going to share with you guys some of the major partners that are with you during the course of your home buying process. Once I get done talking about who some of the players are, we're going to do a deeper dive into what Donna does. And then when Donna is done, I will do a deeper dive into what I do from the mortgage. And then we want to make sure we save ample time at the end, because that's when a lot of your questions come up. And we find that when the questions start coming up, then one question ties into the other. Does that make sense? Is that good? Okay. So, you have a couple players when you go to purchase a home. Your largest player and the biggest player alongside of you is your realtor. The realtor has a really big role in this, you guys, because they're helping you find the home. You have a lot of tools that we didn't used to have to do it, but you'd be surprised that what you see online is only this much of the information that your realtor is able to give to you. They help you figure out what location is best, what size, what style of home is best. Looking at the properties, helping to negotiate that price. Somebody has to coordinate any of the earnest money that goes back and forth, and they have a really big role when it comes to managing the different inspections that are done before you purchase the home. Once you start working with a lender is going to say, oh, by the way, were you pre-approved for the mortgage? So that's when I come in as the lender. I get to help you determine whether or not you are pre-approved. We look at the different programs, products, and options. We help you understand what goes into the numbers. Once you decide what product, program, and numbers, we can help you work on locking that interest rate so it's not changing on you. We take care of submitting the loan, processing the loan, closing the loan, coming to the table. We also take care of ordering the third-party appraisal, which we'll talk about because that's separate than an inspection. And then we obviously have a really big check to bring to settlement because it's for the amount of the mortgage. So we take care of ensuring that the money comes to the table. So while we are two of the bigger players, you have three other pretty medium-sized folks that are part of your transaction. And they're not nearly as front and center as your realtor and your lender, but they play really big roles. For example, it's called a title company here or an escrow company. They have a really large role in that they have the responsibility to ensure that when a property changes hands, they're in charge of all the money. Because it doesn't do you any good if I don't show up with it, and it doesn't do you any good if she doesn't show up with the deposit checks. But somebody's got to put them somewhere. You got to make sure that when you go to buy that house, oh, by the way, you don't want the liens, judgments, mortgages, or anything else that was associated from the person selling it to you, right? You need a clean slate. So the title company's role is the responsibility of ensuring that all the funds come in, all the funds go out, and that the title to the property is conveyed to you, free and clear of anything that had to do with the seller. You hear it all the time, but fraud is a really big part of our world these days. So Donna and I can share with you that when it happens in a real estate transaction, it's very big. We've had situations occur where someone came to settlement and they weren't really the seller. That does you no good because somebody else could come knock on your door. So they have a really big role You just won't meet them till about 11:59 on the calendar schedule. So knowing that they're there. The home inspectors also play a really large role, and that's coordinated by Donna as the agent. It's great when you walk into a house and you see it on HGTV, it looks so great, right? But all of a sudden they get in there, they go to flip it and they pull it apart, and all of a sudden you see that the electric's all burnt out, the structural problem, etc. So the home inspector kind of comes in and gets to take the glitter out of the situation and tell you if there's something that's maybe less than perfect or something that is really majorly, monumentally defective about the property. And last but not least, the appraiser, who you won't ever meet. Because the appraiser is coordinated by us. Appraiser doesn't even go to see Donna. Appraiser is going to the property directly, working with the other agent, and their role is to make sure that the price that agreed to between a seller and a buyer is a fair and reasonable price. Because they're like a third party, because you can imagine the listing agent, wants to feel that the value's here, the seller wants to feel that it's here. Donna gets to come in and says, no, it's here. The appraiser gets to come in and say, here's the fair and marketable value. So they have a really big role. You as the buyer just would not ever see them. Okay? So with that said, I'm going to turn it over to Donna because she plays a really big role in the first steps of the transaction. So, all
Okay.
yours, Donna.
All right. Okay, so everyone's here because they're thinking about buying a house. And the first thing you think about is what your house is going to look like and where you want it to be and what are the important things that this house needs to have. Maybe it's the bedrooms, the bathrooms, things like that. And then we also talk about things you'd like to have, like a garage or a fireplace or something like that. So when you come to meet me, we'll talk all about that and we'll figure out where you want to be, when you need to be into your new home, and what does that home look like. From there, the next thing that we need to do is, as Kimberly talked about, we're gonna get pre-approved because it's important to know what your buying power is. So you're going to talk to Kimberly about that and get all your finances in order to find out that information. You can find out how much you can buy. You can also figure it out, maybe you want to have your payment be a certain number, and then you can back into that number and see how much house you can buy, depending on how you want to do it. The other thing, once we figure that out, I will help you by putting everything into what we have is called the MLS system. And that is how I can find all these homes for you when they come to the market immediately. And actually now we have coming soon information so that I can get you in there as soon as possible. Once we find the house that you want, after we've gone through and do all the shakedown of where we are, we will then get to the point where we get to write the offer on the property. So a lot of this stuff you've probably been able to go online and say, I saw this house for sale, I see this house, I see that house, and then when we come together though, we'll have our finances in order and we'll be ready to sit down and do the process of the agreement of sale. In your packet that's there is a sample of the agreement of sale, so you're welcome to, you don't have to look at it now if you don't want to, but there's some things on there that I will talk about. If you see it on the first page, you talk about all the parties that are involved in the agreement of sale, in the transaction. Some of the questions that I get a lot, when you see a house, let's say the house is $150,000 and you're talking about negotiations and how much you want to offer on the house. I will help you with that because there's comps that I can look at that are recent in the last 3 months to tell you what's fair for an offer. But the other parts of the agreement of sale are when is the settlement date? And sometimes that's very important to the seller. And sometimes the dollar isn't the thing that gets the win. If there's a multiple offer situation, you might be the person that offers 140, but you can settle in 2 months exactly when the seller needs to sell their house. So that's important to know too. Other things on the agreement that matter and part of the negotiation is when you go through home inspections, things that as you negotiate, and you'll see on there what types of inspections you can have, that plays a part in how the seller feels about your offer. But the most important thing is the pre-approval, because you can't submit an offer without showing that you qualify to be able to purchase the house. You have to show where your funds are and that you've gone through the steps with Kimberly in order to be able to purchase the house. Let's see, what else? So when we get to inspections, that will be the next thing. Let's say your offer is accepted. Okay, so now we've got, you're ready to go. You're going to go and get your mortgage application. Then you'll be getting your mortgage. You're going to go through inspections. I will help you with inspectors, go with you on the inspection. After the report comes back, we'll go over everything on the report. We'll decide which things are important to you to go back to the seller and say you need repaired, replaced, or credit for in some fashion. After that, if we negotiate all of that, the title company is going to get title on there, making sure no one else has claim to the property, making sure it's completely belongs to you. That's their job. You've got your mortgage, now you've got your title, now you've got your house. And there's a ton of other forms, but we don't need to go through all that, but that's what's in there, in the agreement of sale. Prior to going to settlement, we'll have another walkthrough of the property. We'll make sure that everything is as it was when you saw it, when you're ready to purchase it. And then when we go to settlement, the title company will be there. Usually the seller and their agent, not always. Mortgage company, me, you, and then that's the day of settlement. And that's when you get your keys, and that's when you get your new house. Sounds easy, doesn't it? That's the basic rundown. And I'm sure as I'm saying it, you're thinking, well, what happens when, and that'll be any questions that you have. You just jot them down. And then, that is pretty much it for me, I think. Let's go with you and we'll see what comes up next.
Okay.
Okay.
Okay, if I keep going?
Yep.
Okay. So now you get me. Most folks aren't in a situation where they could turn around and pay cash for the house, right? So they need the mortgage company to come in. So ultimately, if I'm the seller of the house and you've asked me to put away all my stuff and stage it and let people parade through my house, I'd like to know that you're a viable and qualified buyer to do so. And if you make an offer on my house, I'd like to know that if you're asking me to pack up my items and move out, that you're going to show up on the day of settlement with the mortgage. So hence why a realtor will say to you, are you pre-approved? There's an old saying that used to be pre-qualified where you just say, hey Kimberly, here's what I make, my credit's pretty good, and we'd work on numbers. That's not a pre-approval. A pre-approval says a lender has pulled your credit. They don't have to collect income documents and assets, but I think you'll find that the more seasoned the lender and the more you gravitate possibly from a straight salaried position, the more that lender should ask you to dig deeper into your income and ask some really probing questions. The beauty of the internet is it's a great tool. You've all seen the advertisement that says you can get pre-approved in 1 minute or less, right? But understand, that's based on what you've put in, not what somebody is asking you about. So you have too much on the line. Once you find a house that you really truly love and adore and can see yourself in, to only start going through the process at that point and finding out, oh, by the way, there's a segment of my income that I thought I could count, but lending says I can't. We don't want you to find that out once you found the house. We want you to find that out before you've ever gone through the steps. So that's the difference between a pre-qual where nobody has pulled anything and an actual pre-approval where we have, so that we can get you into a better answer. By doing that, you shop with confidence. And one of the best things that we do when we work with first-time home buyers is they'll walk in and they say, I don't know how much I want to spend, but I'm paying $1,500 in rent, and I just can't imagine going any more than $1,700. And one of the first things we'll say is practice the payment. Practice, practice, practice. If you think that $1,700 is your budget, then when you pay $1,500, move $200 into a different account and see how it feels. And you'd be amazed that all of a sudden the world didn't come to an end. And all of a sudden, then, if we take that first step of confidence, and you're like, well, maybe it is $1,800. Well, practice it. And you'd be amazed that if you do this for 6 months, 12 months, whatever that number is, all of a sudden you're like, oh my gosh, I feel good, I can do 2,000. Because, and that's confidence that we can't give you on paper, it's confidence you've earned the right to say. And there's a really big difference. By going through the pre-approval process, there are times when we will pull your credit and something unexpected arises. Something that you didn't think was there, or something that was a matter of fraud, or something that belonged to somebody else that maybe you forgot you had co-signed for. And by doing it early enough in the process, we have the ability to change that. Whether it's through a dispute, or a correction, or a change, or an update. And because I'm going to talk for a minute of the importance of credit, doesn't it make sense to get those questions answered early so that you can, by the time we really need it, it's where you want it to be. So by dealing with that, and the great part is once you get pre-approved, and especially if it's with somebody local, we have the ability, if you're out on a Saturday afternoon and we've done the pre-approval, let's just say it's for $200,000. And Donna says, we're gonna go in with an offer of $195, even though the house is listed at $200. Why should we show the seller that you can afford the list price, right? It's a negotiation. So we have the ability, she can call me and we can update it at any time. Or I can say, all right, you're going in with $195. We redo the pre-approval letter so it matches your offer. So you can see how working with a combination of folks that are accustomed to working together is a really big benefit, and Donna will tell you that trying to reach an internet company, A, is not easy, and B, it's not the same local personalized service. So there is a difference to that, and I'm not bashing them, I'm just saying that that's a really big difference for you. I won't like it. There we go. Okay. I, as a lender, am going to look at 3 areas. Credit, because it controls product, program, and rate. Credit's the kingpin. Income, which is the ability to afford the debt on a monthly basis. We're also going to look at assets, because it's the ability to purchase the item. Credit is by far the biggest one. Make no sense about it, the biggest question we always get is, I get my credit score all the time, so I know what it is. You see it on Discover, you see it on your bank accounts, you can do it through Credit Karma. Everybody agree? Boom. I have yet, and I probably never will, see a Credit Karma or a Discover or a bank score that is lower, if I'm going to say it right, than what I get. A mortgage company is doing a deep dive into all 3 credit agencies. All 3. All 3 will give a score. And it's an actual hard pull on your credit versus, think about it, if your credit was being pulled by Discover, your bank account, and Credit Karma every day, would our credit not be perfect when we were 12 and be terrible by the time we were 80? And yet you usually see it's the other way around. Our credit grows stronger as we age. So ultimately, they're not pulling credit, but we are. So it is a really big difference for what we do. So again, the earlier we can do that, the more we can see if there's something on there that we need to do something about. We end up getting all 3 scores. All 3 scores will be different. And you can have the same account. You can have the same car loan that reports to all 3 agencies, and you're like, why is the score all different? And it's because technically the agencies, when they report to the credit agencies, they may all do it on a different day of the month. Each agency may run that information through their systems at a different time of the month. So they're never all going to be the same. And remember, your car loan doesn't have to report to all 3 agencies. It may only report to 1, it might only report to 2. So that's why you see this deviation of scores. So being able to walk through that together, and we love it. We'll take any time we can do it face to face versus in another arena, we'll do it. But scores control the product, scores control the rate. Obviously, the higher your credit, the more programs that are available, the more your credit is under pressure, the less programs that are available, and the more impact there is to the rate. Does that make sense? So remember my example of if we do it 90 days, 120 days before you want to go out shopping, if we see something that we needed to address, we could do it. And we can work on changing the scores. So such a common question that I get is, what do I do to make my score better? What can I do? Number 1 thing is you got to pay the bills on time. Anybody want to guess when a lateness will appear on your credit? After how long? George?
A month?
Yeah. But it's not considered late until it's over 30 days. So don't fret if you missed your due date by a day. You know, if it's due on the 5th and you pay on the 6th, it's not going to affect your credit. Going over 30 will. The biggest one that I see move a score, believe it or not, is your balance with relationship to your limit. And what do I mean by that? If you've ever had your credit pulled, think about what it asks you. Your name, right? Date of birth, social security number. Never asked you your income. Credit has no idea what you make or what you do. So it has no idea if someone, it's all a percentage. If somebody's credit limit is 1,000 and their balance is 900, it says that individual is 90% maxed on their ability to go get credit. Where if somebody's limit is 1,000 and their balance is $500, it says that individual has 50% of the credit limit available to them. That's healthier credit, believe it or not. So what we used to see all the time is you'd get all these mail, it says, oh my gosh, balance transfer your accounts, right? Balance transfer them and have a 3% rate, boom. So I got balance transfer them all, shut down every other credit card, and what happened? The score dropped by 120 points. Because now that you know that analogy, what did credit see? A new account, maxed out, and no other available credit. Does that make sense now when you think of it in that fashion? So, making sure you pay those down. Here's a great nugget, write this down. You are entitled to 1 free credit report from each of the agencies a year. Did you know that? 1 free. And you've heard me say, how many agencies are there? 3. So if you do it right, you go to 1 agency every 4 months. You're always keeping up to date then. And remember, they're not pulling your credit. They're only presenting your credit. They're not inquiries. And then you get no more than 90 days. Like if you were trying to fix something, you get the ability to look at it 90 days later. So it's Equifax, TransUnion,
Experian.
and Experian. Got that? Equifax,
TransUnion.
EXF, TransUnion, TU, and Experian, EXP, ERIAN. And use caution. If I say to you, we need to try to have on average 3 open credit lines, please don't run out and open up 3 credit cards right now. okay? If somebody does not have credit, there's something out there called a secured credit card. It is phenomenal. So if anyone is in the situation where they don't feel that they have credit, a secured credit card is something that you go to the bank and get. Still has a credit limit just like a Visa, but you've collateralized it. So let's say you have $1,000 in savings. The bank holds $1,000 as collateral. You use it like a Visa. They start you with $1,000. You still make a monthly payment to it, but it reports to the credit reporting agency. It's much easier to achieve than a Visa on somebody's own who does not have credit. They work phenomenally. So, other than that on credit, credit is a big part. A lender's credit report will be valid for 120 days. So it gives you plenty of time to go shop, but I promise you the world does not come to an end if we have to update it. The world might seem a little bit Columbus-like if you have 7 other people pulling it at the same time, and then we all pull it again. So you see there's a difference. The next thing that we look at is income. Income shows the ability to pay a debt, and make no difference, you guys. Almost everybody in this room has some sort of a debt, whether it's rent, car, Visa, utilities. A mortgage is just a debt. When you start thinking of it in that fashion, it's just a bigger one, that's all. So it gives somebody the right to look a little bit deeper. So a lender is going to look at your income, and it's a big part of it. If somebody's just salary, it's really easy. If somebody's hourly, there's going to be some different calculations to it. You can expect that if you want to use any bonus income, commission income, overtime income, or anything along those lines, a lender's going to look for a 2-year history of it. Same thing with a second job. It's a big part of it. And if anybody is self-employed, I'm seeing a lot of folks doing Uber and Lyft as a secondary source of employment. That's self-employment, guys. So in order to use it as income, you gotta be doing it for 2 years on tax returns to be able to do it. So that's a big difference. And last but not least, our assets. We could talk a lot about the different programs on the kind of assets that you need to buy a home. Trust Donna and I, when there are a ton of programs out there, some that require no down payment, some that require 3% down payment, 3.5% or 5%. They're all over the boards. We'll talk to you about what those different choices are. There are a lot of folks that say, well, you know what if I got a $5,000 or $10,000 gift? Absolutely fine. But there are some restrictions on who the gift can come from. It might be able to come from Uncle Harry if you can prove that it's family. But it might not be able to come from your bestie because it's not family. And if anybody has the opportunity to even look at purchasing their family home that was of their parents or something along those lines, there's so much fun in those transactions. Let me know, because they're a lot of fun. But asset-wise, you just have to exercise caution. It's the only time somebody else is going to look at your bank statement other than you. So the one exercise I always say to everybody is go look at your own bank statement and see if you can determine where the deposits are coming from. If it's an automatic payroll deposit, it's pretty easy. But if all your friends decide that you should be the point person to collect all the money for the wedding gift, the baby gift, or the vacation, and you make cash deposits, you have to be able to substantiate every deposit or it may not be able to be used. And for some people, they could care less. I wasn't going to use it anyway. It was for the gift or the wedding. But there are some programs where it knocks you out of that product availability because it was cash coming in. So this is the only time when I'd say, take a look at your bank statement or have somebody else in your life do it and say, all right, can you see what all the deposits are from? And we'd gladly work with you, especially up front, so we can say, all right, there's a lot of folks that transfer money back and forth these days, Venmo, PayPal, for all sorts of things, and we can help give you some recommendations on that. So, but that's pretty much what I have from a lending standpoint. other than programs. And that's when we talked about there's 0% down programs, there's grants from your communities, there, if anybody's a veteran, VA loans, condominiums, construction, they are all out there. There is a way to finance it. So, with that, I know we touched on a whole bunch of stuff. So, but what we found in doing these is if we then give you guys the ability to ask some questions, then everybody seems to benefit really well from those because it was what they wanted to go from there. So, I will sit and somebody share with us a question that they have. Okay?
When you do the credit check, if we are a family and we are buying the house like together, do you do the credit check for both of us or just the primary?
We would do the credit check for anyone who is going to be on the mortgage and the loan, so.
We can put like both of us and then we'll check both. Okay.
And it would be a joint application. So, did everybody hear this question, right? So if there's two of you, right, and we've learned we knock out what? The high score and the low score. So I'm left with two middle scores. Which score is the one we use?
Lower.
The lower of the two middle scores. So that's why it's really beneficial to do this up front, so that you can see if there is a difference, because if it then works with one person's income, then we would just do the mortgage in one person's name, and we'd have the other person just on title to the property, so, good question. What else?
Just to confirm for me, I've always heard, oh, multiple credit checks are going to affect your credit, but you're saying the free year one, that doesn't, because it's not pulling it, it's just checking it, so that, help me make sure I have that correct.
You got it. So if you ask for a free credit report from each of the repositories, that is not a credit pull on your credit. That's why we say if we do it every 4 months, then you get the ability to continue to watch.
Because I've been afraid to
Anything
even
that's-
go there because I didn't want to check and then, and now I'm in the process of meeting with someone like you and now you're checking and I had just checked and oh crap. And I guess the other thing on the credit line is, so if let's say you've paid down a credit card or paid off a card, leaving it open, how long until that then, or any changes, how long until any of those positive changes are reflected in your credit score?
Okay, great question. So on the first, well, I'll hit the second one. Your credit will always run 30 days at least behind your present situation. So if today is January 30th, the credit agencies have probably reported. Whether they reported what you did in December or did in January is up to them and when. So at least 30 days for a change to occur. But your other question on multiple inquiries, so remember, all credit is doing, and I always use this analogy, credit is like a high school football game. Who's in the stands cheering? Are they cheering or are they booing? So if you have no credit, you have nobody at the game. If you have debts that are paid on time, you have everybody cheering. If you have debts that aren't, you have everybody being the Monday morning quarterback and booing. All credit is the probability that you will pay a debt back if somebody gives it to you. That's all a credit score is. So by virtue of you having multiple inquiries, credit says either, hey, they're just being a really savvy shopper, or what are they doing? They had 5 people call credit. We're starting to get a little bit nervous. It's like the fourth, it's the fourth quarter and there's 1 minute left and we don't know what's about to happen. Are they out there trying to open 5 cards, max it, and run? Right? It doesn't know what you're doing. So that's why you always hear multiple inquiries can impact your score. But if you're a healthy person, you can have 5 people pulling it. It's not going to make a difference. If you have debts that are already in delinquency and you have 5 people pulling it, it's probably going to cause more pressure to the score. But they will always say like-kind pulls generally will not count over a 30-day period. And I'm gonna tell you the one that we see most frequently is anybody ever go buy a car and they disappear for like 20 minutes and you don't know where to go? It ever happened to anybody?
I'm gonna go talk to my manager and come back.
I'm gonna go talk, I'm gonna try and get you a better deal. They come in to see me the next week and it's 8 inquiries. Because they're shopping your car loan around to get you a better deal, and it comes up as 8 different inquiries. So that generally does not impact somebody's score. It just normally gets you really fired up when you're sitting with me, because you're like, what do you mean they pulled it 8 times? I'm like, well, you got the 3.2 rate, didn't you? Right? That's really what happens behind the scenes. So did I answer your questions?
Yes, you did.
Okay. What else? Please?
For example, if the family income is, let it be 100,000 a year, is there any limitations for the price of the house that they can buy? How to calculate that?
Everybody hear that question? So, in the example, if you have your phone, because I do.
Yeah.
Let's use 120.
Do you want a
Okay.
calculator? Is that what you want me to calculate?
If the income was $120,000 a year, do we agree that's $10,000 a month?
Yeah.
By math. A lender on average is going to say about 28% of your gross income should go to the house. And a lender is going to say about 43% of your gross income should go to covering the house and all the other debts that are on your credit report. So using that example, that means that if the family income was $120,000, that means realistically, the affordability
28%
would
was
be.
33,000. 28. I'm sorry, you should have
Would,
just continued.
would be about 2,800 if I had 10,000 a month in income, right? And then all my debts, including anything else on the credit report, should be around no more than 4,300. But remember, a lender will use your gross income. Everybody else, when we're sitting out there as a consumer, I don't tell about you guys, but I never use my gross income, right? My gross income does not sit in my checkbook, my gross income does not sit on anything except the W-2 at the end of the year. So everything you always look at is after taxes, but it's not what a lender looks at, believe it or not, so.
And when you say income, that's a W-2 income, not including, well, there's my W-2 and then there's my 1099 and there, it's.
It can be your 1099.
Whatever that nut is determined is qualifying income, it's then of that, okay.
Yeah.
Okay.
So, which is why, especially if anybody's doing a second job or a 1099, get in front of a lender and be prepared to produce the last 2 years. And especially if somebody has that, this is the best time of the year to come see any of us, because it's before you filed your 2019s. Right? Because then we can say, oh, by the way, you know, here's the impact to it. So, big difference. Anybody else? You know the one that I always love to ask you?
I know, you know, last time everybody like had millions of questions for me, which I love. Somebody asked me something. You know what I want? Oh, you can go ahead.
Donna, this happens all the time when somebody comes in and you guys see the house on the street that has the agent's name on the front yard and you go in.
Oh, you must have been reading my mind. Okay, ready?
Tell
So
them.
in your packet is a consumer notice. And what a consumer notice is when you meet an agent, maybe I'm not going there, so keep rolling with it. When you meet an agent for the first time, they don't represent you. And if you meet them at an open house, that person is there representing the seller. So when you go in there and you start having a conversation and they want to know a little bit about, and they'll say, oh, Kathy, where do you do for a living? This house is X amount of money. What kind of down money do you have? Do you have a, zip it, okay? Because that is not information to give to them, to give to the seller. You're showing your hand, You don't want them to know what you can afford, how much you can spend. I mean, if you walk in there and say, oh yeah, I can spend $300,000 in a house, well, what do you think the seller's gonna want for your house, from you? $300,000. So make sure that you're not giving away any of your information. When you meet an agent, they're supposed to give you that consumer notice, and it explains agency. Either an agent works for the buyer, they work for the seller, or there's another thing called dual agency in there where you can be for both sides. But there's a contract for that. And you have a responsibility to your client, whether you're for the seller or for the buyer, to keep all of that information confidential. So nothing is confidential to an agent to tell anyone unless you have that contract to keep that information between the two of you. So just know that.
I can say to just from any experience I had, we would always say, walking in the door, we have an agent, we were just in the neighborhood, we wanted to see your open house. That's a great way to tell if you would even want your agent to work with that person, because if that person says, hey, no problem, look around, you have any questions, let me know, I respect that. And then you kind of get an idea that, wow, if I do really like this house, I think my agent would be happy to work, this would work well. If you get someone who gets very adversarial or very, oh, well, I could probably do it better, oh no. Don't look at the house because you'll love it, and then down the road, you can just get an idea of, wow, that's gonna be a horrible negotiation. It's not, that person doesn't seem terribly easy to work with or even, ethical. So, yeah, that's a good way to kind of,
Ethical was the word
just
there.
don't, exactly, don't show your hand, don't,
Right.
just be very, hey, just wanted to look around, is that okay? We are represented, here's my agent's card, here's, yeah,
Have a plethora of their cards.
tell your
Right.
agent, hey, do you mind, we're gonna go look at these couple of open houses, and your agent might say, oh, I know him or her, that's cool,
Right.
whatever. So it kind of gives you some comfort level that, oh, I would want to work with this seller's agent and my agent because they were very agreeable to my situation.
Right. And I think by you saying that too, remembering that just because you have an agent that represents your interests, a buyer might think then that becomes their cost for the agent, and it doesn't.
That's correct. To have representation doesn't cost you anything. When a seller puts their house on the market and they have their listing agent, that company, if it was Remax or whomever, that's who's holding the money to pay the agents involved in the transaction, and it's not the buyer. So it is a free service to you to be represented, to have someone who has the knowledge of the homes, the market, how the transaction works, keeping the timeline, helping you with your finances, getting you the proper people, with the mortgage, the inspector, all of that, and doing it many, many times in a year's period where you might only be doing this 2 or 3 times in your life. So I've seen everything come down the pike to be able to figure out how do we handle this situation? And what's the best way to approach the situation for the best outcome for you?
I will point out to all of you that we have been through many markets in our lifetime, and when we first came into the market, the average sales price was substantially lower than what it is now, and the average mortgage rate was substantially higher than what it is now. It was 7, 8, and 9 when we came in. And just last January, a 30-year mortgage touched 5%. A 30-year mortgage today is sitting slightly below 4. And whether you have a party affiliation or not, I will tell you that historically, on an election year, you watch it on the TV, both sides want to do this with what? With each other, right? Everybody wants to point. So that you find that while our market right now is very volatile, our market is also such that neither side right now wants to upset the apple cart. So historically, during an election year, we see rates stay favorable. As we get closer and closer to nominees, and as we get closer to the end of an election year, we tend to see change. So I tell you that if it's really truly something that you are considering, whether your interest rate is 4 or 6, the only thing that it impacts is your payment. But if that payment could be $200 or $250 less, then I tell you that right now is really a good time. And values have been moving back up on us. Donna will tell you that as a first-time home buyer in these price points, they're on average more than one offer at the same time. So you do have to be prepared to be able to get out to see the collateral. You have to be prepared to say if it's right to make the offer. Because there are generally, it's still, winter, you know, we used to say that was only in the summer. Right now,
No.
it hasn't snowed and it still feels like the market is very, very, very brisk. What do you think?
Okay, Donna, where are you seeing, in the immediate area, 10-mile radius, a community where, first-time homes that are relatively turnkey, not fixer-uppers, are there any pockets of those, or are they pretty scattered?
Are you thinking about, well, 'cause there's a lot of variables there, so.
Sure.
Price point, are you talking about a townhouse community or a single-family home? This is what I'm thinking when you say that. I have people that come to me and they'll say, I want to buy a single-family home, and they want to spend $300,000. Typically, a single-family home for $300,000 in this area might need a little work. Or it's definitely an older house and maybe they've updated a couple of things. If you tell me you want a townhouse for $300,000, then pretty much that's going to be in a better condition, or might be a newer home, or, and, you know, I say those things loosely, but, I mean, that's the big difference. And sometimes when people think they just have to have a single-family home, sometimes they realize that and then they move into and they say, you know what, this townhouse community is very nice as well. Yeah. When I talk about townhouse community though, also note, and Kimberly will, if there's an association, a homeowners association, you have to factor whatever that fee is into the payment. Because, and that, right, when you're qualifying, so that's
Correct.
important to know too.
And what you get for that homeowners association fee, because in some instances it covers a lot, in other instances that
Correct.
it doesn't. So if
Yes.
you're looking at, well, if I buy this, I have to pay my own trash, and the HOA is X.
Right,
Over here, the HOA is Y, but it
Mhm.
covers trash. So, yeah, I.
exactly,
Great
Yeah.
point.
exactly.
And if I may,
Mhm.
if Donna was to show you two houses next door to each other and both were at the price point of $300,000 and you made the same down payment, you need to understand that the payments will be different. And that is because the real estate taxes on every property that you drive by are different. So as much as you go through this process and you begin to look at homes, also find the line item that says taxes. Because the real estate taxes, you can drive to the next township and they're very different from township to township or school district to school district. Big difference.
Absolutely, yeah. And before you even put, when you're putting the offer in, I do a closing cost estimate for you too. So you're not going in blindly, not knowing. You'll see how much money you need to bring to the table, like what your down money is, what your payment's going to be. All of that information is, you know, what the current rate will be, you know, relative to whatever the pre-approval is at the time. So you'll know all of that information before you submit your offer and, you know, whether you get approved or not for that property.
What else can we answer? Good.
I have a question.
No, then.
So as far as like student loans, so like mines are kind of up there, not too bad, but they're up there. So does that kind of like affect a far as getting mortgage or?
Yes, because ultimately it's a debt, right? It depends, different programs, if the debt is in deferment, it is counted different ways by different programs. If it's on, we see a lot of the student debt go under what they call an income-based payment plan. We will use whatever's on the credit report, or 1% under most programs, whichever one is higher of the two.
So is it kind of better to be in deferment or like?
No, because generally, I guess if you're somebody still in deferment, they're still doing schooling. And most programs know that that's coming right down the pike, so they will generally count 1%. So I see most at the point that they decide to buy a home, they've taken the debt, and a lot of them have consolidated it already through one of the accounts and gotten a longer, 20-year payment, 30-year payment, whatever it is. And, student loan debt is a really big part of our world these days. It's a lot different to go to school now than what it was 20 years ago, and I think it's remarkable that you're still doing it. So congratulations to you. So it's there, but good question.
Is there an age limit for
There is
loans?
not. Done a loan for a guy, it was about 92. There is an age limit, I will take that back, there is an age minimum limit. You have to be 18 unless the court, we've had to go to court to appoint the orphans court for somebody that wasn't 18, but nope, there's no restriction on age.
Can you advise which loans to get?
I do, but it really that boils down to when we look at somebody's credit score versus what they have as down payment and also what their goals are. So you'll see that the most popular types that are out there are an FHA loan, which is great because you only have to put 3.5% down, all the money can be gifted by somebody else, the seller can pretty much pay all the closing costs, boom, you're in and done. But the downside is you carry mortgage insurance forever, it never comes off.
How much percent is that insured?
It's a pretty big, there's no, I can't say, oh, it's exactly 1% of the loan, but, on case it could be $150, $200 depending on the size of the loan. Whereas it didn't used to be permanent, and there are exceptions to that, but I'm just using that as the golden rule of thumb. Whereas on a conventional loan, if you don't put down 20%, there's something called mortgage insurance, it's part of the loan, but it's temporary until you get more than 20% equity. And the most common thing somebody will say to me is, oh my gosh, Kimberly, I don't want PMI, it's not tax deductible. And I said, how's that rent going right now? Is that tax deductible? No. So if 10% of your payment's not tax deductible, but a bigger chunk is, let's go with the bigger picture that you don't have now. But ultimately, there are a lot of programs where you can combine second mortgages with it, and grants. So that's part of what we do when we sit down together. So.
The timeline from start to finish also, if you do find a house that you want and let's just say it's tomorrow, the 31st, usually it's 30 to 60 days out, just to give you an idea of when you should expect to settle in that house with the seller. Most sellers don't want anything more than 90 days out, depending on the situation. Usually when they're ready to go, they're ready to go.
You're right. And I think something to remember for somebody who's renting is, let's just say you settled on your mortgage in January, your first payment's not until March. So sometimes folks, it's the old adage where we're so used to people thinking that they had to settle on the last day of the month and move on the last day of the month, and then they're up till midnight and it's just gruesome. If you don't have a mortgage payment and you have the whole next month off, do it, make it a lot less stressful for you and your family. And move over a course of 2-3 weeks. You'd be amazed how much softer landing it is and nicer. And that's kind of what we like, because it's nice dealing with nice people. It's just kind of what we like, and we like it to be a really good experience for you.
If, for example, I found a house that I like, but price dropped, but I think that's a nice house and a reasonable price. Does that mean that that house has like something wrong with
Ghosts.
it?
Yeah, that's, I'll,
Maybe. If a house sits around for a little while, I can try to do some research. I can find out if they originally overpriced the house to begin with, and that's why it was sitting there. And then maybe now they're in the right ballpark for someone to purchase it. I can find out if there was an offer on the property before, and if the deal fell through. Try to find out why. If there was an inspection that already happened, I can ask to see that inspection report, to see if there was anything that came up on that report that maybe scared someone away. And with that said, the other part, before you put your offer in, there's something called a seller's property disclosure statement. And it's, I don't know how many pages it is, 8, 9, I'm not really sure. But the seller has to fill it out, and they have to talk about very pertinent information about the house. How old is the roof, the hot water heater, the AC unit, things of that nature. How long have they lived there? Were there pets on the property? What kind of water do you have? What kind of pipes are in the house? All of that is listed. And so that gives you some general idea about the house prior to you having your inspection.
Should they put the information if somebody was murdered?
Yeah.
Not, no,
Okay,
no.
okay, so I
I
would
don't
not
think
know
so.
that. Okay,
They can, but they don't have to,
okay.
yeah.
I've even seen those, like, say, on a counter when you go to an open house, where some will have those copies of those disclosure statements that you can look at while you're.
Right, exactly.
That you can look at while you're looking at
Exactly.
the house, so you would know that.
And if there was an offer on another house that you're saying, the one that sat around for 6 months, let's say there was an offer and they did have a home inspection and then they found out that the septic system failed and that was why, that information has to go, they have to update the seller's disclosure now. They have to say, the septic system failed, and then this is the thing that we did. There's always like the lines for this is what we did
That's
to
the reason
correct the
why
problem.
price dropped.
But a price drop is not necessarily always a red flag. If there's a lot of things on the market and they just didn't get, it just depends,
it could be building and all of a sudden the house is about to be done and they're sweating, right? They need to,
Mhm.
they need
Yeah,
to
that's
sell.
another good point. Maybe the seller's building another house and their house isn't going to be ready until the end of the year, like this month. So when they start getting offers, they're not in a position, they're not in a hurry at that point. And so they're like, no, I'm gonna wait, let's see what else we can get, let's see if we can get something better. And then when it gets closer to when they really need to move, because a lot of people do that, they'll say, let's just throw this up and see what happens.
Mhm.
And usually that's, that it's not, it doesn't work out in the end for the seller because they end up losing money doing it that way.
And I'm gonna make a plug statement for Donna. You will find that, 20% of the agents do more than 80% of the business. And, you may have like LegalZoom, my best friend's cousin's sister's brother might be a part-time realtor. But you're gonna find partnering with somebody that's very well seasoned and in the locality of the property, if it's being marketed and listed by another veteran realtor, you have a much better communication. You also have a much better opportunity of which to, as you said,
That's what I was
understand what happens and what's going on.
Mhm.
So partnering with
And
somebody that's been
How
around.
much then do you pay you for an open house?
0.
And how do you make money?
Because the seller pays the commission. Yeah. Seller pays if the house is listed with Keller Williams, and whatever they decide is the percentage, that's what the Keller Williams holds, and then when it comes to the settlement, that's how they pay. They
So I
pay
always
the
use
least
that diagram.
Yeah.
If I'm a seller
Yeah.
and I put my house on the market, the person that listed my house, I have already agreed, I'm paying a
Right.
6% commission is typical.
Right.
So on $100,000 house, I as the seller have already agreed I'm paying $6,000 in commission. So if the person, if you walked into that open house and you strike up the conversation and they end up representing both sides, they got all 6. But if you come in with your own agent, the person that listed it got 3. The other 3 is there for the agent, for the buyer.
Well, that's why they are angry when you said, like, if
Does that help? Yeah, there you go, so, you know, but your rights deserve to be heard, protected, and negotiated. That's why we say that, don't just make friends with the person there. They may be the greatest person in the world, it might be Donna, right? It might be Donna, you know, but you have to make sure that your interests are valuable, okay?